Let's get into the property market, and investors are recalculating after the federal budget, many weighing up whether higher taxes and tighter rules will force them to rethink future investments. Anthony Lundale from Equilibria Finance joining me. Anthony, I guess along with accountants, you're one of the busiest people at the moment in the wake of the budget. Tell us, what you're seeing at the moment.
Yeah, it's created a lot of confusion and a lot of anger, to be honest with you, from not only existing property investors, but a lot of people who had made plans for property investment. We've got a lot of pre-approvals in place now that are essentially not worth the paper they're written on. A lot of people who'd done wealth accumulation planning for retirement. Bearing in mind, a lot of property investors are mum and dads who have worked hard, created some equity in their home, and use property investment as a way to essentially create some wealth and not be dependent on the government in their future. Those plans are suddenly overnight changing all around, all because of what the government's done with no mandate around the changes to negative gearing and capital gains tax. And we're recalculating investment opportunities now, and people's serviceability or what they can afford to do as an investor. Some of it's dropped 20 to 30%. And most clients are now rethinking whether they in fact go into that asset class.
It is grandfathered though. So what does it mean for people that had already been doing this prior to the budget? Yeah,
look, if you've got an existing investment property, it's grandfathered. So what that essentially means is negative gearing will still apply and the capital gains tax concessions will still apply. Even if you're in a situation where you have owned a property, lived in the property and convert it to an investment, the existing rules around negative gearing and capital gains tax do apply.
All right, well, that sort of brings me into a question that we've got from a viewer, Aaron, as well. So I just want to ask you this, and we can bring it up so that we can sort of read it a little bit more clearly. But if an owner-occupier, let's bring up the audience question, had purchased their property prior to budget night and presumably were already living there as a principal place of residence, will they remain eligible for negative gearing in the future if they move out and turn the property into a rental?
Yeah, that's a really good question. So the short answer is yes. If you own a property, reside in it, convert it to an investment down the track, yes, the current rules will apply. I think something else that's important is if you signed a contract before the budget and the property hasn't settled, you are eligible for the existing arrangements, even if it hasn't settled. It's based around when the contract of sale is signed. A lot of confusion's been created, but there are two important clarifications.
I mean, I guess we don't know the future, but do you think there could be an instance whereby they roll back this grandfathering? Like, what is that doing in terms of sentiment?
Sentiment shifted immediately, notwithstanding what Angus Taylor said and notwithstanding potentially some changes that might happen before this is legislated. But I think from a property perspective, any changes to capital gains tax, any changes will probably be outside the property sphere. So I think right now, property investors are working that these changes are coming in, and right now the sentiment shifted. We've been talking to accountants, we've been having strategic discussions since the budget with clients of theirs and ours that have been preparing for this investment strategy. They've had pre-approvals in place. The whole thing's now being rethought, restructured. They're looking at other asset classes. In fact, they're looking at, do they invest in commercial properties? Not many are really shifting their focus to looking at the new house and land or the new unit block as a viable investment option. So sentiment's already shifted, to be honest with you.
So what do you think this is going to do for the housing market? Because it was meant to equal the playing field. Is that actually going to happen in your view?
Look, I think this idea of squaring up into generational wealth is really a furphy, to be frank. I think this is more about raising tax than tax reform across a number of areas, whether it's small business owners with CGT property and a number of things in the budget, testamentary trusts, etc. So if we look at the property market, housing supply and the issues of affordability haven't been created because of the capital gains tax or negative gearing. Capital gains tax and negative gearing benefits have encouraged investment in the Australian property market, which provides housing for rentals and it also provides wealth accumulation opportunities for people who may not have been able to get equity or use leverage to actually invest in their wealth. Property is a fantastic way to create leverage and ultimately create a nest egg for you and your family, so you're not relying on the government in the future. So we're absolutely seeing that sentiment change, and I think we're going to see issues in the housing market, unintended consequences around investors deploying capital elsewhere. We've already got incredibly tight rental vacancies of under 2.5%. We're going to see less liquidity in the housing market. Those with an existing investment property are more likely to hold their investment property rather than bring it up on the market. We're going to see rent investors, who are often first home buyers, looking at leveraging into the market, selling their property, getting the capital gain to buy an owner-occupier. They're not going to be in the market anymore. So I don't really see how it's going to solve, and everything's grandfathered. So it doesn't help new investors, the younger generation. I think for the younger generation, yes, it might free up some stock in that area because we don't have the investors, but fundamentally we've got a shortage of supply. Investors help create supply for renters. I think there's going to be more renters looking for houses. So the fundamentals don't make sense around essentially intergenerational wealth transfer or intergenerational equity in what they're talking. Housing shortage has been created by excess immigration and not enough supply. We still can't build enough houses right now, and they're driving investors into new builds. So the economics don't make sense, and I think we're going to see some consequences like that. And I feel for renters, because rents are already going up and it hasn't even been legislated.
Yeah, and landlords using the budget as an excuse to raise rents. How have the banks responded?
Banks have already made changes in terms of, a lot of banks removed any of the, so when banks are looking at an investment, they'll actually factor in the negative gearing and how that will affect their serviceability. So that's been removed. So we're seeing a drop off in what people are able to borrow of sort of up to 20-30% in some cases. Essentially, banks are also saying that if you've got a pre-approval in place for an investment property that used that methodology, it's essentially not worth the paper it's written on. If you've signed a contract, if settlement's coming up, everything's being honoured in that context, because they will still be grandfathered. But essentially, as of budget night, any pre-approval, any new application that we're putting in investors, it's a new ball game.
Look, you don't sound very happy. As a small business owner, how are you feeling about the budget?
Look, I think fundamentally, most small business owners are family businesses. Most small business owners often, the government's tried to essentially align small business taxation with PAYG, but there's a fundamental difference between an employee and someone running a small business. Someone running a small business often has their livelihood on the line. They may not earn an income for 2 or 3 years while they're building the business. They may not be paying themselves a salary for a while. They might be using their home equity to invest in their business. They'll be working 13, 14 hours a day at times. The risk and return of a small business owner is totally different to a salaried worker. So the government, in my view, is economically illiterate around small business owners and how they operate and their contribution to the Australian economy. Small businesses employ 5.1 million Australians. This is a total disincentive for a small business owner to get out of bed and work those 14, 15, 16 hours to create a business that employs people. Often an exit strategy for a small business owner is the sale of the business that becomes their retirement nest egg, their superannuation fund. So changing the goalposts on how your exit is taxed through the change in the capital gains tax concession is a total misunderstanding of how a small business owner works and operates, and changing the tax treatment of trusts, often which are used by small businesses because they're often a family business. So they might set up a discretionary trust to distribute the business earnings and profit through to family members in a sensible, tax-effective, structured manner. The way they're going to treat the taxman of bucket companies could be a bucket company that receives any distributions, the tax rate could be over 50%.
Yeah.
So it's incredibly disrespectful and incredibly misunderstanding around how small business operates, who small business owners fundamentally are, and why they set up those structures in terms of running their business through. So the change in taxation on trusts, 350,000 small business owners have trust structures set up. So 350,000 small business owners are now looking at the cost of have we got the right operating entity for our small business? In the meantime, trying to run their business. And the exit around the changes in capital gains tax, which is often, as I said, often a small business owner isn't paying themselves superannuation, isn't paying themselves a salary. They're employing other Australians. They're the heart and soul of the economy is really appalling.